We're gonna fix that. There we go. Yeah, apparently my USB hub just went gunny bags on me while we were trying to select our first dance for some fucking mysterious reason. And it's weird too because it wouldn't like connect back to the server for whatever reason. But anyway, let's go ahead and go down with our first dance. And as far as where we want to go, what we want to do for our first dance, I had done a coin flip earlier, and I had determined that 99 problems would be our first dance for the evening. And so here it is, body count, 99 problems, and a bitch ain't one. First dance, here on Coin Metal. And that was Voivod with Sonic Mycelium. And so, as far as what we're going to get into today, got a whole bunch of stuff. And I was just touching back to my my tabs here, and I wasn't quite sure which one I really wanted to start with, but I guess it'll be this one. Got this thing here, it's on Coindesk.com. Bitcoin mining difficulty hits all-time high as delayed ASIC shipments come online. Yeah. And this is by Colin Harper. So yes, penis. And it was authored on April 1st. So we're gonna hold it in suspicion. Despite the fact it was authored after lunch, we're still gonna... Yeah. Bitcoin's mining difficulty hit an all-time high today after a roughly 6% increase, a move that follows a record month in earnings for both Bitcoin miners as new generation ASICs come online. Quote, difficulty refers to, quote unquote, refers to the relative measure of the amount of resources required to mine Bitcoin. This measurement climbs or falls depending on the amount of power consumed or hash rate produced by the network at a given time. Bitcoin is programmed to adjust its difficulty level every 2016 blocks, or roughly every 2 weeks, to ensure that new blocks are mined at a stable rate. This difficulty is measured on a relative scoring scale where Bitcoin launched with a mining difficulty of 1, the lowest it's ever been. Difficulty works like Google search scores in that the scoring system is internal and has no reference point or unit for measurement outside of the networks themselves. As of today's adjustment, Bitcoin's current mining difficulty is at 23.1 trillion, according to data pulled from CoinDesk's journalist's Bitcoin node. Per figures from BTC.com, that is roughly a 6% increase from its last level of 21.8 trillion, which makes it the second largest adjustment of the year and the fifth upward adjustment in the last 6 difficulty periods. The difficulty adjustment is arguably one of Bitcoin's most important features, as it ensures block times remain relatively stable, while also preventing a large miner from eating up too much of the hash rate. New ASICs online lead to increased difficulty hash rate. The latest adjustment is a notable bump. Compass Mining CEO Whit Gibbs told CoinDesk because it's likely attributable to tens of thousands of new machines coming online that were previously on back order in the ASIC supply chain. ASICs, or application-specific integrated circuits, are chips that are customized for a specific use. Gibbs said the current adjustment is just a sampler of the flood of hash rate that will come online in 2022 as more back-ordered shipments are filled. Quote, Today's moderately large difficulty increase is not surprising, and I expect it's only a taste of what will come later this year and into 2022 as delayed machine shipments start arriving and being deployed. The pending flood of hash rate about to enter the market will only continue pushing Bitcoin's mining difficulty higher, which should track with Bitcoin's price, Gibbs said. As Bitcoin's price has gone stratospheric, mining investments have been soaring. North American miners such as Hut 8, Marathon, BlockCap, and others have used 2021 as an opportunity to aggressively expand operational capacity. As these machines come online, Bitcoin's hash rate and difficulty are rising in step with miner revenues, which hit a record $1.5 billion in March. I would say arguably it should be much higher at this point, and I believe it would be if we were pursuing the original path of Bitcoin. And in all honesty, I believe that economically it's the best, and in the not so distant future, maybe, I don't know, I would say maybe 2 to 5 years, I expect that we are just going to be processing as many transactions and putting as many transactions in a block as occur over the block time, basically. And so, that's just my feeling. I believe that was the original intent, and that it was thought about. You know, they didn't just like come up with that arbitrarily. You know, and it's one of the reasons why I've been so dismayed with this idea of shifting everything off chain and you not ever interacting with the Bitcoin blockchain at all. You know, your transactions don't need to be counted on the Bitcoin blockchain. Your coffee purchases don't need to be counted on the blockchain. It's just a whole bunch of bloat. I mean, really, the only people I can imagine making that kind of argument are bankers and Visa. Oh, you don't need to record. You can keep all that. You can keep track of that at your bank. They can hold on to your Bitcoin for you. Suck it. You know? I mean, read that white paper. It said explicitly peer-to-peer digital cash. Anyway, the next one I got on CoinDesk is on Bitcoin's Lightning Network. One of my other favorite pet peeves. Now has 10,000 active nodes and $69 million in locked value. I wonder if it's going to tell us how many of those nodes are actually AWS instances. And this is by Colin Harper, and this is authored on April 5th, 2021 at 1:40 p.m. PDT. Oh, and yes, penis. The number of nodes on Bitcoin's Lightning Network has nearly doubled year over year, according to public data. The Lightning Network, a layer on top of Bitcoin blockchain that uses its own special rules to facilitate cheaper, faster transactions, had about 5,335 public nodes in April of 2020. Now that number sits at 10,348, a roughly 94% increase. This figure only includes nodes with public connections, however, and the real number is likely higher when factoring nodes with private connections. As Bitcoin's on-chain fees grow alongside Bitcoin's price, scaling technologies like Lightning offer users cheaper and faster way to transact. If Bitcoin will ever be used as day-to-day currency, a scaling solution like Lightning is paramount. And avid Bitcoiners even use the Lightning Network today to purchase goods and services. Consider this Iranian Lightning user who used Bitcoin to buy a PlayStation, now past that is otherwise restricted by sanctions. What? Dude, somebody wrote this with spell correct on. And see, lightning invoice, blah, 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 blah. 102,448 sats. Let's see, and you will earn 1,024 sats in rewards. And let's see, this is on April 3rd, 2021. Yeah, good for him. With Bitcoin's Lightning Network seeing more activity than ever, the total number of payment channels on the network, the two-way payment avenues that power Lightning's plumbing, is now over 45,000. The Lightning Network currently holds 1,185 Bitcoin, worth some $69 million. I wonder how much of that is in the possession or ownership of one entity. Now, let's see here. Though introduced in 2017, and that puts a whole big spin on it, the past 2 years have been critical for Lightning's growth. At the end of 2020, crypto exchange Kraken announced it would support the feature. Before Kraken, the only prominent exchange to adopt Lightning were Bitfinex and Bitcoin-only River Financial Exchange integrations. River Financial Exchange. Or River Financial. Pardon me. Exchange integrations make it cheaper for customers to deposit and withdraw Bitcoin, often paying cents in fees instead of single or double-digit dollar amounts they may pay Bitcoin's main network. Yeah, but here's the problem. They don't have the fucking money. They can spend it in select places, but they don't have the money. Like, it's not like technically theirs. It's still locked up in that payment channel until they pay that single or double or maybe even triple digit transaction fee to close the payment channel. Continuing on, since Kraken's announcement, the UK's Coin Corner, Vietnam's oldest exchange, and OKCoin followed suit with their own Lightning integrations. In addition, Jack Muller's Strike, a Venmo-esque payment app that uses Lightning to settle USD and other fiat balances, came out of beta this year and is forthcoming full rollouts in a number of markets. With businesses adding Lightning, the network's liquidity and routing capabilities are improving. User apps like Strike are also making it easier to onboard users to what has historically been even more unwieldy technology for the uninitiated than Bitcoin. See, that's the thing. The original Bitcoin client was scan, enter, send. If you had it on a device that had a camera, you scan it with a fucking camera, you type in the amount, you click send. That's it. Scan, enter, send. You got to run your own ATM now, and then you've got to pay those double-digit fees every time you want to set up a payment channel. And I'll admit, I've not used Lightning at all. As far as I'm concerned, it's not Bitcoin. And it takes away from Bitcoin. Because every one of those transactions should have had a normal fee paid on it. And as a matter of fact, if we were doing transaction in an as-received manner and without a block size limit and RBF, those transactions would be on-chain. They would be on the public blockchain. You'd still have your anonymity capabilities. And you wouldn't need to run an entire layer of infrastructure on top of it to maintain any kind of maintain the ability to afford transacting. See, this doesn't end the problem. It just makes it a problem for a later date. And one of the things, I don't know if this has changed or not, but the last time, the way I understood it was that if the transaction fees, and I don't know if it's like the low end, the median, or the high end, but if at any point, I think it's like the average. If the average transaction fee is more than what your payment channel balance is, it will close out the payment channel and dust your funds. Like it'll make the withdrawal for the transaction fee, and there goes your balance. So, and that's if you're self-hosting. Now, if you got somebody else hosting your funds, then it'll only be a little bit longer until their funds get dusted, and thus your funds get dusted too. We haven't seen this yet, but I believe it will come. I believe that the bursts in mining that these guys are talking about, if they're at all correct about all that hash power going to Bitcoin, which I'm not entirely certain they will be, but if they are correct about that, it's going to cause Bitcoin to go through the fucking roof, because it will cause the difficulty to bump up again, and that again will make it more expensive to mine for Bitcoin, so on and so forth. But anyway, so I mean, if you can imagine, like, say, if we want to add a zero to it, so say Bitcoin is $580,000 per Bitcoin, and I know that sounds really wonderful, right? Well, those transaction fees just got a zero too. And so now we're not talking about single or even double-digit transaction fees. We're talking about double-digit transaction fees or triple-digit transaction fees, and on the high end, quadruple-digit transaction fees. And as long as this race is running and people are bringing more hash power online and so on and so forth, that number is going to continue to go up. So, imagine if they were to do an evaluation of all the privately run nodes, including whatever private ones they may come across, and examine the amount of money that is tied up in each one in terms of Bitcoin or cash, doesn't matter. And I guarantee you the vast majority of them do not have thousands of dollars in them. They have tens, hundreds, maybe $1,000. I mean, because 69 million is not really a lot of money. I mean, when you consider how many users, assuming of course they're all individual users and not all owned by somebody, one person. We don't know that either. It could just be a whole bunch of nodes that are AWS instances that, some organization or another is running all of the nodes, and they feel safe doing it that way. You don't know what the nodes are either. For all you know, there's some fucking terminal at every single bank in the United States or something like that. You don't know. Anyway, $69 million. Somebody pointed this on Twitter. There are some NFTs that have a market cap of 69 million, and they've only been in existence for a couple months, and Lightning Network has been in existence for 4 years now, and the market really doesn't have a whole lot of enthusiasm for using it to spend their Bitcoin. I believe that in the not so distant future, the vast majority of these nodes are going to go away. The vast majority of them, as in thousands of them. And then the only ones that will remain will be entities like Visa, MasterCard, the Federal Reserve Banks, NYAG, big mucky mucks. Officials. Not the average person. But that's possible with second layer shit. That's possible. It's possible to monopolize that, and it's one little parameter. It's the block size limit. If you were to eliminate that, all of this ability to point at everybody and say, you will do things our way, you will only transact in pure Bitcoin, you will not transact in Chinese mined Bitcoin, fucking, oh god. Wait, there was one of those guys from the Shark Tank who was commenting on that. The guy's a fucking idiot. The guy is a fucking idiot. Do you really care if it was Chinese miners that mined with fucking coal, that burn coal to make the energy do you really care? No, you don't. If you bought it at 58,000 and you sold it at 65,000, you take your profit and you walk. I don't know where this guy is coming from. I really don't. There's an effect, we've seen it, and with regard to Bitcoin mining, where it incentivizes people to create new forms of energy. We've already seen this in existence. It's already happened once or twice or 1,000 times. I don't even know how many times it's happened, but it's been related to geothermal, most specifically though hydro, because it's one of the cheaper forms of energy. But this progression that we are seeing is so wildly different than the narrative that is being pumped out there, that Bitcoin mining is some sort of energy suck. Dude, we're about to watch it double and then quadruple over the next year or so, just according to what that report was saying about mining shipments and late shipments coming to their destinations and getting set up and coming online. I mean, and I believe them. Now, whether or not all of that hash power will go specifically and solely to Bitcoin mining is yet to be seen. But what we do know is that hardware that is set up most likely specifically to mine Bitcoin is going to be coming online. And what does that tell you? It tells me that the price of Bitcoin is going to go up. And when it does, it's going to take transaction fees with it. Now, we're all going to enjoy it while it's going up, but when we go to exit, this is when we're going to find out about transaction fees. This is what happened at $20,000. When the transaction fees flew through the roof, people were trying to get out. They're paying $10, $20, $50 to get their fucking transaction done. You can only do that so many times before you start saying, God damn, my ass hurts. Why am I fucking myself in the ass like this? When I could exchange this for like Ripple. And it cost me like 1/10 of a fucking penny to do the same transaction that I'm getting fucked in the ass on the fucking transaction fee for Bitcoin. I'm not going to put myself through that. I'll do it on Ethereum Classic, pay a couple pennies. I'll do it on Verge and do it for fucking 1/10 of a fucking penny. The point is that the market will not endure the abuse if it doesn't have to. And see, as far as I'm concerned, Lightning Network, they're talking about, you're only going to pay like a fraction of a penny for a fee, right? Well, that was the initial promise for Bitcoin. And that's the same promise that can be made with various altcoins and can be fulfilled by various altcoins. How long do you think it's going to take the public to figure that out? To me, it's going to take about as long as it did the last time, which is maybe a month, maybe 2. You see a real big jump in the Bitcoin fees, the transaction fees, and we will. Like I said, if we start seeing like 6-figure Bitcoin, that'll cause it right there. 6-figure Bitcoin, Jesus Christ. People will want to be cashing out. They'll be wanting to take some of that profit. And some people are going to be wanting to take that profit in the form of Bitcoin, but in their own wallets. And when they do, they're going to experience those transaction fees. They're going to be like, nah, I don't want to do that. And they're going to look at Lightning Network, and if they do any kind of investigation whatsoever, they're going to find out that they're just getting credit for their Bitcoin, basically. I mean, unless they're doing self-hosting and incurring the fees anyway. And so, yeah, the likelihood in my book is that they're going to opt for a mid or low cap altcoin that they can afford to transact with. And Bitcoin is going to get the message, because enough of the transactive activity is going to be shifting over to altcoins for them to start saying, well, gosh, maybe we should, we need to do something to sweeten the prospect of using Bitcoin versus these altcoins. We got to do something, because if we don't, they're gonna continue to eat our lunch. And I really believe it's at that time that we're going to start seeing talks about, maybe we should get rid of the block size limit. Maybe we shouldn't be trying to corral people into using second layer and third layer and token layer bullshit instead of using Bitcoin. Maybe that'd be a good idea. Anyway, let's go ahead and throw back down with some music. And as far as where we're going to go with that, no, I haven't played any dope, so let's go with that. I'm back here on Coin Metal. And that was Funeral Procession by Kingdom of Sorrow. And so, the rest of what we got on the grill for tonight, got this thing here. I found it on, honestly, I was looking for proof of work cryptocurrencies, like new ones. And what I came across was this, and I thought it was kind of interesting because I'm always a Verge fan. And so here it is. It's on commodity.com. Verge is a cryptocurrency designed to give users Tor-level privacy and security while still allowing the cryptocurrency to be practical for everyday use. This guide will explain what Verge is, how it was designed, provide live pricing information, and explain what drives its price. Well, we also discuss what experts have to say about it. Interested in trading Verge? Here are some brokers and exchanges available, blah blah blah. We don't go through that. Disclaimer, subject to regulations. Suck it. Well, I guess it's not terribly long. Anyway, what is Verge? Verge was founded in 2014 under the name Dogecoin Dark. This was a fork of Dogecoin and was designed to provide an anonymous alternative to Dogecoin. Despite having a small devoted community, Dogecoin Dark struggled to acquire popularity. In 2016, the decision was eventually taken to rebrand the currency under the name Verge. This was done to help differentiate the currency from other so-called, quote, dark coins, as Verge's creators and community felt that they were not getting the recognition that they deserved. The privacy altcoin. Verge sits alongside other so-called, quote, privacy coins like Monero, Pivx, and Zcash. The creators of Verge want to use their currency to take blockchain technology and make it accessible to the everyday user. Actually, it's always been accessible to the everyday user, but anyway, continuing. They also want to give users the option to protect their privacy and prevent outside entities from tracing their transactions. There are several privacy coins available at the moment, but what makes Verge special is the team's commitment to transparency and usability. One of the most interesting features of Verge is the cryptocurrencies blockchain features both Tor and I2P integration. Both Tor and I2P are effective tools to anonymize their users, but they work in slightly different ways. Tor integration. The Onion router works by directing the user's traffic through a worldwide overlay network consisting of more than 7,000 relays. The package is encrypted and then is sent to another relay that can only read enough information to send and receive the package. This is then rewrapped and sent on to the next relay until the package has reached its destination. At this point, the final relay can decrypt the information held in the package, but will be unable to pinpoint the source IP. This grants the user anonymity. I2P integration. Like Tor, I2P transactions are designed to shield the user's IP address and activities from prying eyes. Unlike Tor, I2P uses packet-based routing rather than circuit-based routing. This means that the service can move around a congested network and maintain a more secure service at times of heavy load. When users send information to each other, the sender and receiver both build a series of tunnels. The information is then randomly sent through these tunnels until it reaches its destination. In essence, I2P is a large peer-to-peer network. Android Wallet. Verge uses both of these protocols, and they are one of the only cryptocurrencies to have access to an Android wallet with built-in Tor and I2P options. The approach taken by Verge is interesting because it allows them to maintain an open, transparent blockchain while also ensuring that users' transactions are private. The wallet will allow traders and users to assess the health of the blockchain without violating anyone's privacy. Wraith Protocol. When was this thing written? Because Wraith Protocol was... I don't know what's going on with that. Let's check this out. Oh, okay. The last update was March 18th, so apparently I guess there was some progress there or something? I don't know. Wraith Protocol. The creators of Verge are rolling out the Wraith Protocol. This will provide users with a toggle option where they can decide to either allow their transactions to be publicly viewable on the blockchain or to hide them completely. The Wraith Protocol will use a combination of key agreements, stealth addresses, and Tor plus SSL integration to protect its users. The protocol is covered in detail in Verge's black paper. Transparency. One of the things that makes Verge stand out from other privacy coins is the team's focus on transparency. The cryptocurrency was not pre-mined or part of an ICO, and the entire project is available on GitHub. This is a sharp comparison with a cryptocurrency like, say, Dash, which has been plagued with controversy surrounding the Instamine event during its launch. Verge's future. In terms of usability, Verge offers Electrum-powered wallets on every platform, including Linux. The team has further enhanced the utility of XVG with the release of the RSK platform. RSK allows Verge to follow in the footsteps of Neo and Ethereum in implementing smart contracts. How is Verge made? Verge is created in much the same way as other cryptocurrencies. Rather than being printed by a bank or government, Verge is made by its community, its mind. Decentralized ledger. Like most cryptocurrencies, Verge is based on a decentralized ledger of all transactions called a blockchain. This blockchain is secured through a consensus mechanism called proof of work. A miner, such as yourself, uses their computer to solve complicated equations. Once the equation is solved, a new block is added to the chain, and the miner is rewarded with some verge. This is assuming, of course, they actually get the block reward. Continuing. These equations are defined by an algorithm, such as script or SHA-256. The majority of cryptocurrencies only use one algorithm. Different algorithms are more effectively, quote, solved by different kinds of hardware, and this has led to the rise of specialized machines called ASICs that are designed to mine a specific cryptocurrency. These expensive machines can give large mining groups undue influence over a cryptocurrency and prevent less well-equipped users from making a profit. I want to make a note right there, and just to indicate a minor issue I have with this. See, in my eyes, this is a temporary issue, meaning that over the longer term, ASICs will either A, become cheap enough for everybody to afford, which is kind of happening already, or B, they will be targeted. That the entities out there that have large warehouses full of ASICs are going to get targeted. That's right. Hash farms. You're going to be zapped. They're going to be hit with something, whether it be a physical entrance by tactical teams or some shit like that. But the point being is, they are physical liabilities because they are concentrations of hash power that are, i.e. concentrations of wealth in the hands of the public. And if there were ever a time when governments decided, hey, you know what? You're not going to play along with us and give us like a tax layer and a cut of every single one of your transactions. We're going to bomb your network. That's right. Bomb the network. And that'll be kind of easy if the vast majority of the network is held up in a tiny number of warehouses distributed all over the planet. It won't matter that they're distributed all over the planet because they're not millions of itty-bitty nodes distributed all over the planet. There are millions of nodes in a few isolated spots on the planet. And this makes them much bigger targets. I mean, even if they are in urban settings, it doesn't make them any less a target. And so, yeah, the possibility of forcing compliance that way is there. But that's why I'm saying, you know, the whole, you know, ASICs are a threat, pro tem, my friends, pro tem. The vast majority of people participating in cryptocurrencies these days are doing so at least partially due to a desire to free themselves from one or more undue influences in their lives, whether it be banks and government, or just banks, or just government. Take that one to heart. Continuing. Verge's 5 algorithms. To counter this influence, Verge uses 5 different algorithms: Script, X17, Lyra 2 Rev 2, Meyer Grossel, or Gossel. I keep putting an R in there, I don't know why. Gossel, and Blake 2S. Each of these algorithms favors a different hardware setup, and so utilizing all 5 allows for a wide variety of hardware to be able to effectively mine Verge and ensure a more equal distribution of newly created coins. And just to let you know, that also eliminates the issue that I was just talking about. You know, if we were like Bitcoin, where we were heavily dependent upon ASICs, targeting us and getting rid of the network would be much easier. Continuing. What drives the price of Verge? Before its rebrand, Verge never really managed to make much headway. Its value stubbornly stuck below even a single cent. Post-rebrand, XVG has managed to do much better for itself and has seen significant growth. Given the relatively short history of Verge's growth, it is difficult to pin down specific growth factors. However, the price outlook for all cryptocurrencies are governed by a similar set of rules. Media attention. The most significant price driver for Verge so far has been media attention, or more specifically, social media attention. This phenomenon is fairly common and sometimes results in day traders buying up large amounts of the currency and then selling it shortly after, hoping to catch the crest of the wave. This tactic is viable, however, you are competing with large numbers of users, so it can be difficult to sell at the most profitable moment, and if you miss the peak, you might even lose money. Might? New feature announcements. You should also watch out for the introduction of new features. When a cryptocurrency adds new features, it can help to increase media attention and user interest. In the case of Verge, its RSK platform and smart contracts have increased the utility of Verge. Retail partnerships. Another major factor will be secondary partnerships, particularly retail. Verge aims to take the blockchain into everyday use, which means that it wants merchants to accept it as a payment method. Verge already has a handful of vendors willing to accept payment in cryptocurrency, although there are no major retailers yet. If Verge does manage to gain a partnership with any major merchants, then you should expect a sharp spike in value. Regulations. Given the increasing risk of cryptocurrency legislation in the wake of Chinese and South Korean moves to regulate the market, it shouldn't be surprising that experts think privacy-focused coins will do well. If Bitcoin holders fear that they will risk losing access to their funds, then they will naturally look to transition their assets to anonymous cryptocurrencies like Verge. What is the outlook for Verge? As with most cryptocurrencies, the short-term price outlook for Verge can be described in one word: volatile. The cryptocurrency market is still young and therefore still unstable. And just to let you know, there's never going to be a period when cryptocurrencies aren't quote-unquote volatile. It's just a fact. Continuing, you should expect fairly big peaks and troughs in the short term. In the medium to long term, Verge has a positive price outlook. It has experienced fairly explosive growth that self-corrected and as more features are added to the blockchain. Verge versus Bitcoin. How does Verge compare to Bitcoin? What are the key differences to Bitcoin? See below for our head-to-head comparison. Let's see. Verge was founded in 2014. Bitcoin was founded in, I'm pretty sure it was 2008. People call it 2009, but I'm pretty sure it was out by 2008. Continuing. Founder Sunrock is a pseudonym, and yeah, we know who that is. And Bitcoin is Satoshi Nakamoto, and yeah, we don't know who that is. The current market cap of Verge is $2 billion, and the current market cap of Bitcoin is over $250 billion. Although I'm pretty sure that that's changed too. How long did it take to hit $1? Verge or 100 rather. Verge hasn't yet hit $100, although it did experience a 1,000% increase in value during December 2017, and it took 51 months for Bitcoin to hit $100. Oh man. It doesn't even count me as a notable supporter, but it's got John McAfee in there. Oh man, I don't know that you want to count that one anymore. I mean, I wouldn't withdraw support for John McAfee. He's a big guy. Anyway, but yeah, apparently Bitcoin has a lot more people. Let's see. And this is basically kind of a stroke article about Verge, although I find it really interesting that Saul Bowden, thank you very much, good sir, written very well. There was one thing on here that he didn't cover though, and I think this article should probably be updated. But yeah, the one thing it doesn't show on here is mining. There's not a whole lot of concentration on mining on this one. And when I look at cryptocurrencies, I look at mining. And one of the things about Verge was that I always find it in the top 10 of profitable coins to mine. Like always. And oftentimes it's more profitable to mine Verge than it is to mine Bitcoin. So, you know, when I start seeing stuff like that, I start to think that the price for Verge versus Bitcoin is going to go up. You know, because those miners are going to be wanting profit for their coins. And they're going to want to take profit in both US dollars and Bitcoin. Anyway, let's go ahead and throw back down with some music. But where to go? You know, I haven't played any Prong tonight. We're going to have to resolve that issue. And I want to start with one of their newer songs. Here it is, Age of Defiance by Prong, here on Coin Metal. And that was Nothing Face with Make Your Own Bones. And so, it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate your support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And so as far as our last dance is concerned, I haven't picked one out, you know, as per normal. And so I'm digging around for one right now, and I think I got it. Here we go. Nevermore. Born. Last Dance. Here on Coin Metal. Thank you again for listening, and you all have an excellent evening. Good night.